their business is done. If they send you a counterfeit gold eagle or gold bar or silver or whatever, if they send counterfeit to you, their business is done, because then their reputation, their word is broken. So I would just say, and do understand that any time metal is shipped out, it's done 100% under camera, and the coins that they receive, other than coins directly from the U.S. Mint, it's my understanding that all coins are assayed and proven to be real when they come in, before they go back out. So if you use a reputable dealer, use us, Miles Franklin, you're going to get the real deal. Well, I mean, the payback in gold is obviously greater than the payback in silver, so gold is going to be the target. The paper markets were the tail on the dog, but the tail constantly wagged the dog, because they would overwhelm the physical markets with paper. The problem now is they've done it for so long and to such a grand extent that now there's a question whether these paper contracts are going to be able to deliver. And the answer, I think, you're going to find in the next month to 3 months. We're going to find out that no, the paper markets are not a substitute for real physical, because they have to deliver real physical that does not exist to be delivered. The market is, I mean, the bottom line is all of the futures, options, paper products, etc., they're all based off of the physical metal in the first place anyway. That's why they're called derivatives. They're derivatives of the actual product. There's not as much concern. There's concern. I mean, if gold were to go, if gold doesn't deliver, the system dies anyway. But if gold doesn't deliver, it's not a direct effect on production, if you will. Silver is used in so many different applications, whether it be industrial, technological, medicinal. I just did an interview, was talking about every time they shoot a Tomahawk missile, there goes a monster box. You can't make a Tomahawk missile without roughly 500 ounces of silver. So silver will have profound ramifications to the real world, to the real economy. Now, that said, if silver goes failure to deliver or gold goes failure to deliver, you're stuck in the casino, because the casino will close. And when the casino closes, and we've talked about this, for the last, year and a half, maybe even 2 years, we've talked about the great taking. Once the casino closes and banks and brokers and insurance companies start going belly up, they're going to take your capital with them. And that's why it's so important to get your capital out of the system into something, gold and silver, that cannot bankrupt, and in a place where it can't be taken from you.
Gold shortages would shake confidence, but silver shortages could disrupt modern life. Silver's unmatched electrical and thermal properties anchor its role in electronics, medical equipment, solar technology, and aerospace systems. Even advanced weapons systems require significant amounts of it. Demand keeps rising while available supplies remain tight. If paper markets fail to deliver physical silver, industries dependent on it could face production slowdowns or halts. A disruption wouldn't simply affect investors, it would ripple into manufacturing, defense, and innovation. A breakdown in silver availability could function as a real-time stress test of the global economy's dependence on this critical metal.
Right. Well, going back to visit the late 2019 episode, that was just before COVID, and the repo rates spiked to 10%, and that the Fed was having to put $100+ billion into that market every single night so it could clear. Then conveniently along came COVID, and two things happened. The real economy worldwide was definitely stunted or shut down, whatever you want to call it. There was less demand for credit because of COVID, and it allowed central banks all over the world to flood the markets with liquidity. Problem solved. Not solved, but the can was kicked down the road. Here we are again, We're nowhere near where we were in October of 2019, but the overnight rates are starting to move higher again. It's a concern and should be watched. Again, everything, whether it be the real economy, production, consumption, transit, and also the financial world, the financial economy, everything runs on credit. If credit gets disrupted or credit ceases anywhere, it'll be a shock that will, it'll shut the whole system down.
A failure in metals delivery would likely coincide with deeper financial stress. The modern banking and brokerage ecosystem relies heavily on collateral, credit, and counterparty trust. If institutions face sudden liquidity shortages or portfolio losses, they may freeze withdrawals, halt trading, or move to protect their own balance sheets first. Once that happens, customer capital, cash, bonds, or shares can be trapped in the system. This is why some investors are shifting toward assets outside the financial infrastructure. Physical gold and silver, stored securely, function as insurance against institutional insolvency, sudden bail-ins, and the cascading effects of a market shutdown.
I would just say welcome to the party. And next, I would say we have interest rates still at basically generational lows. I mean, we're not where we were 3 or 4 years ago. We're not at 0% rates, but rates are extremely low. There's no risk premium in interest rates at all. So brokers and banks, they understand that the likelihood long-term, 5 years, 10 years, longer than that, the likelihood is that rates are going to go higher, not lower. And they also understand that there's going to have to be another mass printing, whether they call it QE or not, it doesn't matter. But there's going to be another global mass printing. And the problem with that is that debases the currencies, and that lowers the value of the unbacked currencies. If the values are lower, then you got to give more of dollars or euros or yen or whatever for that same ounce of gold or the same ounce of silver. So I think they're looking at it pragmatically and saying, yeah, the day of buying and holding bonds is over, and that's why they're recommending half of that bond position be liquidated and put into gold. The only problem with that is if everybody did that, you'd have gold at probably, who knows, $2 million an ounce. Just pick a number, but it's going to be super, super high.
The last major credit market tremor struck in late 2019, when overnight lending rates unexpectedly spiked and central banks intervened with massive liquidity injections. The crisis was overshadowed when global lockdowns reduced credit demand and justified extraordinary levels of money creation. But the underlying fragility never disappeared. It merely paused. Today, short-term funding costs are rising again, signaling renewed stress within the financial plumbing. Economies worldwide remain deeply dependent on smooth credit flows. Even temporary disruptions can trigger broader instability. As global debt reaches historic highs, any shock to credit availability could rapidly spill into markets, production, and consumer activity.
There's always some risk. I think the risk will be greater as the prices go higher. And I would simply say, either call me or call you. We clear our business through Miles Franklin, and Miles Franklin's been in business over 30 years and never had, they have never delivered a counterfeit coin. As far as I know, has never delivered one counterfeit coin to a customer. And if it was done, it was rectified. But understand that if you go through a reputable broker, their business is done. If they send you a counterfeit gold eagle or gold bar or silver or whatever, if they send counterfeit to you, their business is done, because then their reputation, their word is broken. So I would just say, and do understand that any time metal is shipped out, it's done 100% under camera, and the coins that they receive, other than coins directly from the U.S. Mint, it's my understanding that all coins are assayed and proven to be real when they come in before they go back out. So if you use a reputable dealer, use us, Miles Franklin, you're going to get the real deal. Well, I mean, the payback in gold is obviously greater than the payback in silver. So gold is going to be the target. And I would say either generic rounds or bars are going to be the easiest to, they'll be the easiest to counterfeit. I mean, it's more difficult to counterfeit an elaborate coin, but yeah, they can be counterfeited. And that brings me to a topic I want to talk about. In silver, I've been an advocate of junk silver as the best form to own in the United States. Roughly 14 dimes equals an ounce. So you've got 14 transactions. It's the smallest denomination. It's U.S. Mint lineage. It really can't be counterfeited because it's got to show scruffiness. I mean, these were in people's pockets. And we've got an anomaly going on right now where if you're looking to sell junk silver, you're looking at $3.50, $4 under spot. And if you're looking to buy junk silver, you can buy it at spot, maybe 50 cents over spot. It's the cheapest form that you can buy right now. So if you're buying silver, you definitely want to buy junk silver. It's the cheapest and it's the best. And if you're worried because the bid is below spot, and it's well below spot, pretty much everything else is very close to spot, or even eagles are above spot. Understand what has happened. We finally got back to this $50 level, and we stayed here. We've been here for, call it a month, but we're approaching it. And literally, I'm not going to say the only form or the only way to buy silver in the late 1970s, early 1980s was junk, but that was by far and away the primary form of silver to buy. So what you've seen over the last few months is that many of these people who have held on for 40 plus years have turned seller. And the dealers and the wholesalers got overwhelmed with the selling. So what did they do? They lowered the price. And if they're, call it $4 under spot, that's 8% below spot. And what they're doing is they're sending those coins into refiners to melt them down. And they pick up that 8% is what they're doing. Now, that said, this is a short-term event because the supply is already, the supply of junk being sold is already starting to dry up. And when it does dry up and prices start to normalize, guess what? There's way less junk available that still exists because it's been melted down. And I'm gonna say right here that I think when all is said and done, junk silver is going to become the most expensive form of silver in the United States, even priced higher than eagles. And I say this because I believe the supply is being destroyed on a daily basis. It's being melted down.
Major banks and financial advisors, once defenders of traditional bond portfolios, are rethinking their strategies. With real yields deeply negative over long horizons and sovereign debt levels ballooning, the old model of buy and hold bonds forever looks increasingly outdated. Many professionals now expect renewed rounds of global monetary expansion, which would weaken fiat currencies over time. As a precaution, institutions are recommending reallocating portions of bond holdings into gold, a trend that continues to accelerate. If large numbers of investors and funds attempt this shift simultaneously, gold's price could experience dramatic upward pressure due to limited supply.
Yeah, there's a backlog. I mean, the amount of junk that has been turned in for sale has been huge, and it has backlogged the refiners. This will pass, and when it does pass, I think, like I said, I think junk will end up being the highest priced silver in North America. Right. And I think at the peak, American Eagles were $17, $18 over spot, and junk was as high as $13 over spot. And at the time, the premium on bars really didn't move much. I mean, I think 100-ounce bars maybe were $3 over spot. Um, and that's pretty close to where they are now. The bar market has not moved much, but yeah, junk has had the premium has collapsed and gone negative, and I think it's it's a no-brainer to buy junk silver right here. That's simple. I mean, just look at spot, and if today in this market right now, if you're looking at a high premium, anything over, I don't know, even 5 or 6% for gold eagles, anything over that, you're getting ripped off because the premiums don't exist today. Most products can be purchased within 5% of spot.
Within the silver market, an unusual trend is unfolding. Older U.S. silver coinage, often referred to as junk silver, has temporarily fallen to unusually low premiums, even dipping below spot values in some cases. This reflects a wave of long-term holders finally selling after decades. Refiners are melting these coins, permanently reducing available supply. When this inventory dries up, premiums are expected to reverse sharply due to scarcity. Historically, junk silver carried some of the highest premiums during tight markets. With limited new supply and a mounting backlog at refineries, many analysts believe these coins could become the most valuable form of silver in North America.